Hi, everyone. Thanks for spending your time with us. I see some familiar faces in the audience, so that's great. Um, so I'm going to welcome my panelists onto the stage, but before I do, I know many of you were here for the previous session, but I wanted to just set some context, some of the stakes that we're contending with. So I want to paint a picture of a startup that was founded in Kenya, I believe, that, as you're familiar, in Kenya and indeed many African countries, agriculture is an important form of subsistence rather. Actually, for a number of these farmers, these smallholder farmers, they contend with issues of disease on their crops, etc. So this social impact startup created a product that allows these farmers to actually take a picture of their infested crops and then send it to the database. And that, in turn, actually informs them what's wrong with their crop. Excuse me. And I think that really kind of paints a picture of the level of impact that's possible. So the possibility to actually affect the livelihoods of these smallholder farmers. And we want to talk a little bit about that today. In some sense, with that example, you can see how we are taking for granted some things that you need to actually support that product, Wi-Fi, and also sort of access to a structured database, as was mentioned in the previous panel. So we're going to talk about the challenges. We're going to talk about the opportunities today. So as mentioned, my name is Yvette Demiri. I'm Chief Revenue Officer for Steers. We spend a lot of time thinking about structuring data. We are the largest investor database operating on the continent at the moment, and so I'm really interested in this problem as well. So I'd first like to introduce my first panelist, Timbo Drayson. So Timbo is the founder and CEO of Oki. Previously, he worked at Google, where he introduced Google Maps to the Middle East and Africa. He also invented Chromecast, where he holds, I think, like 7 patents for that, so that's pretty cool. He has a master's degree from the University of Oxford, and he splits his time between the UK, Nigeria, Kenya. Timbo, please join us on stage. The next panelist is Oyin Sholebo. She's the former managing director at Techstars, which is the world's most active pre-seed investor and a leading startup investor in Africa. Techstars has a global footprint and provides early-stage entrepreneurs with access to capital. Thanks for joining us, Oyin. My next panelist is Andre Ayote. So Andre is a partner at Modus Africa. It's a deep tech-focused VC firm that's focused on backing African startups. He brings over 15 years of experience, both in private equity and venture capital, and was an advisor to the quantum computing group at the University of Toronto. I'm not sure if I've seen Andre. Okay, maybe he'll join us later. My next panelist is Kristen Wilson. She's the managing partner at Innovate Africa Fund, an angel fund that backs super early stage startups and ventures that are solving Africa's most pertinent problems. Kristen is passionate about helping businesses scale and who are leveraging technology and data infrastructure. Okay, great. All right. So you have to excuse me, I have a bit of a cold, so I may turn away to cough. Okay, so I want to start with just an open question to everybody. Each of you are sort of involved in that early stage of thinking about these early stage bets, which include AI, et cetera. Many of you are funders on the panel, and then we have a founder as well. And I think with the investors in the audience, one interesting question is sort of, just from your perspective, what are you seeing in terms of opportunities when it comes to AI applications on the continent? And maybe we'll start with you, Timbo.
Great.
Thanks, Tim. And Owen, what do you see as opportunities?
Hello?
Yeah, I think that's all now.
Okay. So I come from the perspective of having invested in 24 African startups over the last couple of years, but then also having had the oversight of the selection for Techstars London Accelerator over the last few months. And what I see is I would describe AI applications in perhaps three buckets. I think there are those that are actually building these LLM platforms. There are those that are building tools that help build or help train these LLM platforms. And then there are those that are using open source AI APIs and then retraining them for their local purposes. What I find is that for a lot of African startups, they're not very transparent about how they're actually using AI and kind of slap bang AI on their pitch deck because they think it will gather more interest. But most likely they're doing that latter part. They are using open source AI and applying it to their own applications, which is fine. The kind of opportunities that I'm seeing are across all the sectors. So, for example, in agriculture, in ag tech, we're seeing a lot of use cases with startups doing things like predicting the fertility of soil or looking at weather patterns to predict what the yields would be like on certain fields so that we can feed more Africans as well as the rest of the world. In the case of health tech, we know that we don't have enough infrastructure, we don't have enough doctors, we don't have enough hospitals, and I'm seeing a lot of startups saying that they're trying to use AI to solve for that, particularly in rural areas. So, for example, they might be looking at diagnostics using photo imagery or using conversation, or they might be looking at providing services, again, through chatbots and information provision. In the case of financial services, I'm seeing a lot of fintechs say that they want to use AI to solve this unbanked population. So, for example, what they might be doing is using alternative information to assess whether or not someone is creditworthy because they're unlikely to have a bank account. So in the case of an organization, it might be looking at their transaction history. In the case of an individual, it might be looking at their mobile data history. So I'm seeing a lot of different applications. Logistics, I'm seeing a lot of use cases in things like route optimization. So it really does vary, but I think what they are typically doing is taking open source APIs and applying it to their particular use cases.
Great, thanks, Owen. And Kristen, how about yourself? What are you seeing?
Yeah, I think my experience is actually a little bit different than Owen's. So we invest very early stage. I've been investing on the continent for the last 10 years. So what we've actually seen, I think, is kind of akin to the point that Timbo was making about this huge acceleration in the last 2 years, but especially over the last 12 months. So we are seeing certainly lots of the sort of superficial GPT wrapper type companies, but we're also seeing a lot of people building LLMs, applying existing LLMs. For instance, some of the most interesting applications I'm actually seeing are around precision medicine. So if you think about existing genomic data sets, they've been using data from other continents, Europe, Asia, the Americas. Africa's genomic pool is kind of missing from that. And as a result, there's also lots of analysis that hasn't quite happened with that genomic data. However, there has been a lot of data collected. There's been biobanking on the continent for a while. So, for instance, we're seeing lots of interesting new ventures on the continent, or ventures that have been around for a little bit. They're now applying the capabilities of these AI technologies to essentially catch up, right? So really speed up analysis and insights generation from some of these, and they're building their own systems. They're thinking critically about some of the mistakes. Human Genome Project has been going on for a while. In Morocco very soon, I think sometime within the next month, there's the African Genome Project going into its next phase. So really interesting sort of like real hardcore deep tech infrastructure that's working, leveraging some of this technology that I think is going to really move things in leaps and bounds. I think that we're actually going to see the continent as part of the conversation more prominently now, because I think also, I think one thing that we've seen in general with the continent is that folks are keen, folks are eager, right? There's even when there's no mobility, folks are taking advantage or creating new paths to that mobility. And I think AI is acting as a kind of equalizer. There's been a lot of tech talent for a long time, essentially, but that talent has been migrating to find opportunity. Now a lot of that talent can work from anywhere. North Africa in particular is really interesting. The panel before, I really agree. The work that Tunisia, Morocco have done in terms of training skilled engineers, people that can create. There's real intellectual property also being developed. So it does give me a lot of optimism, and I share Timbo's view regarding, I don't think we can predict how big this is going to be. As an investor on the continent, it's an exciting time.
Excellent. I love an optimistic panel, so we'll lean into that. Let's go back to Timbo. So, one of the points Owen raised was around, the transparency of how startups are using, AI applications. And, as the founder on the panel, I'm curious as to if you can sort of share, maybe for the investors in the room, who might sort of be also wary of people slapping AI on there for higher valuations and whatnot. How are you using AI, and maybe you can help sort of calm their fears about AI on the continent?
I think it's a fair concern, and I share it, especially when you read and see a lot of perhaps some of the solutions that are coming out in the Valley, because everything's AI enabled, but I'm like, what problem is this fundamentally solving? And that, for me, is probably the most important thing for investors to look at, independent of AI. It's like, what problem is this company solving? And invariably, we're seeing all this hype around all these businesses that are doing all these great things with lots of cool AI technology, but it's like fundamentally, who's going to use and who's going to pay for this? And so I think you have to just use that normal investment process to then look out of that. I think the second part then is to look at the solution and really understand what and how the technology is being used. If you took the AI element or part of the solution or the full solution out of it, how capable is this business to still being solved? That's a signal for you in terms of how much is the AI creating a catalyst to the solution and therefore the opportunity. And then the third, I think, which was also mentioned on the last panel, is ultimately the unit economics. Like, AI right now isn't cheap. And these LLM platforms are charging because they have huge costs, which is the reason why, OpenAI and various others have to go and raise multiple billion rounds. And I think it's very, very important that the entrepreneurs are being very considerate about the unit economics and the costs of AI on their business. In terms of the application for OK High, I run a business that's solving the digital addressing problem, and we use AI as a form to be able to digitally verify that someone does live where they say they do. I'd say the beauty about our solution is we started off with the solution without using AI, and we used a human-driven algorithm that was built by our CTO that worked okay, but we then started building and using AI 4 years ago to start building on that. And I also do like the point around the fact that the proprietary data is also a really important signal to look at. Right now, I often get asked by investors a very valid question of like, why couldn't Google or Meta do what you're doing? And the number one reason is that the data set doesn't exist for them to be able to train and be able to suddenly overnight solve the problem like we are doing. It took us 4 years and now 183 million data points for us to get enough quality data such that our solution is now recognized by the Central Bank of Nigeria. But that's our proprietary data. And so I think that's another angle that's also really important for investors to look at.
And Owen, I want to give you a chance to respond to that from the investor's perspective. From your time at Techstars, how were you thinking about AI applications within your portfolio? Timbo mentioned a couple of key things around that defensible sort of strategy and maybe the unit economics. But when you're looking at a pitch deck, what were you thinking about?
I would agree with a lot of what Timbo's actually said. So the reality is, if I compare our Africa portfolio to our non-Africa portfolio, Our non-Africa portfolio has a lot of AI in it, but our Africa portfolio doesn't actually have a lot of AI in it, and it's for some reasons that Timbo's actually touched upon. So at the pre-seed stage, what are we looking at when we're investing? We're looking at the team, we're looking at the market size, we're looking at the traction, and we're looking at the product. In terms of team, we're ultimately looking for teams that have something that means that they are uniquely equipped to succeed at what they are doing. So probably they have a lot of domain expertise, they understand their customer really well, or maybe if they're building for AI, they have that technical expertise to actually do that. In terms of market, we're looking for big market sizes, and it was touched upon in the last panel that our populations are not homogeneous. Spending power is a challenge, so it's really difficult to build that billion-dollar company unless you are looking at perhaps going across your borders. In terms of traction, we're looking at early indications of product market fit, so early indications that they are building a product or service that a customer is going to love and keep on buying. And then we are looking at the actual idea itself. Is it defensible, right? How easy is it for someone else to pick up your pitch deck and replicate what you're doing? And the reality is it's really difficult to get all of those four pieces together. And it's even more difficult for an African AI company to get all of those four pieces together. And I give the comparison of London when I'm looking at thousands of applications for our London program. I'm looking at applications from individuals that have PhDs in AI, from the Oxfords, the Cambridge, the etc. So they have that core skill set that we don't have in abundance yet on the African continent. And then I'm looking at pre-seed startups that are already well-funded, because they're likely to have come out of university spin-outs where there's a big angel group. So the Cambridges, the Oxfords, the London business schools, they have angel groups that invest a lot of money early on in those startups. They're likely to have gotten tens, if not hundreds of thousands of pounds worth of investment from the likes of Innovate UK. So when it comes to that J-curve that they need to go through in terms of the money that they need to put to build the infrastructure, to hire the talent, they're already at an advantage. So because of all of these factors, I don't see a lot of AI companies in the African portfolio. But to Timbo's point, what I do see is companies that then transition into AI after they've built for a few years, after they've figured out the way to hack distribution or hack data. And I've got quite a few examples in my portfolio of companies that, similar to OK High, started with just solving a really key problem. And maybe they started manually. Maybe they then added technology on top to make that more efficient. And now they have this unique data set that allows them to be uniquely positioned to apply AI to make them even stronger.
I want to pick up on one of the points you raised, Owen. It's on, the amount of time it takes to, it might take a startup to, for example, hack data. I spend a lot of time thinking about, structured data sets. Kristen, I know you do too. From your perspective, what are the challenges that you're seeing, or how are you seeing these startups navigate this, limited data availability, the lack of structured data? What are you seeing?
Right, and I actually think it's more of the second than the first point. So there's a lot of data, but it's really unstructured. And it's also hard to find it. It's expensive where it is structured. And so I think you're seeing some good MacGyvering by founders. And actually, for us, it's a good indicator when we see founders and we look at their approach. So because we do have that emphasis on like you said, my background is more sort of research and technical. So when we are diligencing founders, I am interested in how they're thinking about product. I almost never look at pitch decks first. I look at their product first and see what they're doing, or at least their path to product. And so one of the things that we're looking out for is how are you solving for the lack of data or the lack of structured data? What sorts of systems have you put in place? We are seeing a lot of attempts at primary collection, which can be very costly, right? And sometimes even can feel inefficient. But we've also seen founders justify that approach because maybe the quality of the existing data the amount of time that it would take for them to clean the data up, structure the data, it would be more efficient for them to then go ahead and just, aggregate that data themselves. So some of, I think, the more promising moves that I've seen is companies within the same space essentially looking at ways to collaborate. Or players coming into the space and thinking about how to integrate the different data sets. So for the last 2 months, we've been looking at a real estate company that's been thinking about, so you're Nigerian, so there's all these listing platforms with all these terribly listed, improperly catalogued, listings for properties across Nigeria, and very often there's actually even repetitions, right? And so there's a player in there that's essentially taking all of that information, running it through automation and processing systems, trying to clean that data up, and then build out models from that. And so those sorts of plays are really interesting because you're even seeing essentially value propositions being developed around systematizing the data, cleaning the data, and then making it available for other players to use.
And you mentioned collaboration. Can you talk a little bit about how you've seen that work?
Yeah, I mean, the resources are scant, right? So to Owen's point, if you're coming out of, the UK or, Silicon Valley, like Tim mentioned, there's just so much capital flying around. I was at Stanford for many years. It's like, oh, you open your eyes, here's $10,000. On the continent, it's not the same, right? You have to prove so much just to be able to get a 20K check, a 50K check. Our fund size is relatively small, but we do have such a high threshold for founders. So what that means is that for folks who are, again, focused on the problem. So there's a lot of lifestyle entrepreneurs everywhere, right, in every market. But for those founders who have identified a core problem, a core value proposition, they recognize that because of the lack of resourcing, it's just mission critical to collaborate. So even coming back to some of the examples I was talking about in the healthcare space, you're seeing, genomics labs collaborating across universities in Osun State. Osun State's actually just launching a new genomics facility that wants to take care of all of Nigeria's, biobanking and data aggregation needs, and is thinking and already looking at how to make partnerships into the Science and Technology University in Ghana, and so on and so forth. So again, you're seeing, this is critical to think about, folks that have a clear problem, right? Because this is, I think, sometimes the challenge. If you're a lifestyle entrepreneur or you just like building things, it's a little bit different. But I think when folks have kind of honed in on a problem, they recognize that to be able to get from point A to point B, there's just not enough resourcing available. And so there's a lot more, I think, interest in building together, sharing resources. But this is happening in more technical domains rather than the more sort of generalist fintech type place, yeah.
Got it, thank you. And Timbo, back to you. If I could just zoom out for a bit, I think, just to look at how sort of AI applications in Africa compare to the rest of the world. I think we've started touching on that a little bit. But from your perspective, as someone who's actively using it now, what challenges do you think exists on the continent that you typically don't have to contend with elsewhere? And maybe where do you see the opportunities within that context?
Great. I'd start with capital. And I think this is how hopefully everyone in this room can perhaps help. It was very concerning to me to hear the last panelist, the gentleman from Flourish Ventures, sort of warning around the lack of investment because this could be a bubble. I'm like, this is exactly why we are not going to be able to take advantage of all this new technology, is if there isn't the investment dollars to support that. As an investor, your goal, and depends on your model, but ideally you're looking for that investment that's going to give 100x return. Well, guess what? There are opportunities now with the advent of AI as a catalyst to be able to create those 100x returns, but those are only going to come if you put money in and you take bets. And they have to be a significant amount of capital because we're still all figuring this out. This is a new paradigm. And that's also a wonderful thing because it's a square playing field for everyone. And it's an opportunity for everyone. It's an opportunity for every investor in this room to capitalize on that. But it has to come from investors being able to provide the capital. That's number one. Number two, I think it's on all of us to be able to upskill ourselves in this. I mean, AI is a very catch-all term for just a huge amount of complexity and technology that's being figured out and changing daily. And we all need to take advantage of that and make sure that we're upskilling ourselves, whether that's on the operator or on the investor side. That means you need to be using tools, you need to be experimenting. I was chatting to Russell last night that I tried the ChatGPT discussional new launch like a week ago, and I think it's like one of the most transformative pieces of technology I've used in a decade. But like, we have to all be abreast of this and using it ourselves on a consumer application perspective, a business application, and then trying to go deeper. And so I actively try and invest to make sure that I'm also staying ahead of the game and understanding some of these investments. And then I think additionally, ultimately there is this huge opportunity that we have at our fingertips, and we have to work together around this. And I think too often it feels to me as a founder trying to talk to investors around AI, it's like we're on different sides of the table, and it's kind of crazy because we both need each other, and we both need to forge this journey together and find ways to work together. And so I really want to encourage a lot of collaboration with investors, and honestly, probably quite a lot of humility on both sides to be like, actually, we don't know, or actually, that's a great question, I don't really know, or you know what, I don't understand this technology, can you explain this to me? And so I think we have to collaborate.
I'm going to put you under some pressure, a bit of a wild card, but obviously at OK High, you're going on some kind of journey. You're here to speak to investors, et cetera. Can you tell us a little bit about what you see ahead? If you got all the capital that you need at this point, where would you be headed? What are you working on building?
From an OK High perspective?
Yeah.
Well, we're solving a problem that's costing the global economy $200 billion a year. And actually, we don't see many people trying to effectively solve this. We're using Nigeria as our test market. And right now, we're raising capital because we have signed contracts that are going to 30x the business in the next 6 months. And I think very soon, by the end of next year, we'll have tens of millions of people in every single bank and fintech using our technology. And right now, the government in Nigeria is reaching out to us to see how they can use our technology to provide the digital addressing standard for the whole economy, which is running across obviously hundreds of millions of people. But as I said, Nigeria is just a test bed. Our technology is completely transferable and scalable overnight to any other economy. And we're not just talking Africa, we're talking the Middle East, Asia, Latin America. And so in 5 years' time, our vision is that anyone with a mobile phone will have an OK High address and have access to services that they didn't otherwise have, whether that's getting an ambulance to your door or getting access to a financial service or credit that they didn't otherwise have.
Great, thanks for sharing that. So going over to you, I think one of the things I picked up was from Timbo's last comment was just on patience and collaboration, the conversation that's needed to be to happen between investors and founders. Can you talk about how, from your perspective, obviously presumably you have LPs or had Techstars, people you're raising funds from, but I'm curious as to that relationship. What needs to evolve in order to sort of accelerate AI investment in AI opportunities on the continent?
So I think the conversations are being had because I think the world knows that AI is here to stay. Therefore, the conversation needs to be had as to what we actually need to provide founders to actually succeed. I think LPs will typically invest for one of two reasons. Either they're investing from an impact perspective or they're investing from a returns perspective. I think from the returns perspective, the conversation needs to be around how deep that J-curve may actually be, and therefore how much capital the startup actually needs to succeed. When we talk about how much it actually costs to to hire professionals in machine learning and data science, in AI ethics, etc., these aren't cheap resources. And if we continue to have this kind of risk, this Nigeria-Africa risk premium, which basically means that African startups are lower valued and therefore can't raise as much, it means that it becomes very difficult for them to be competitive because they can't hire the people that they need, and they can't go through that J-curve where they need to invest in the infrastructure and they need to invest in the talent to actually build AI solutions. So a very frank conversation, I think, needs to be had around the returns perspective. And then from the impact perspective, Charles mentioned this at the very end of the panel as to where the money is actually going. So I'm a VC, Kirsten's a VC, and we're talking about investing in the individual startups, who, in my perspective, we have different opinions here, are typically applying API to existing solutions. I really think that the opportunity that Africa has is to do AI earlier on, is to be looking at how we can build those LLMs, or how we can be building tools that enable us to build those LLMs or train those LLMs. And that's really expensive work. And it's also really time-consuming work. And the conversation needs to be had with LPs far above us as to where is that money actually going. If we look at how ecosystems have developed in the past, I think it's useful to look at the likes of Silicon Valley, the likes of the Middle East, not to steal from them, but to understand what's worked. And if I look at Silicon Valley, when it developed all those years ago, there were so many different stakeholders that enabled that development. There was the amazing technical talent that was coming out of these top universities. There was this boom in venture capital, but then there was also this government support. This government support in terms of making sure that the regulatory framework was friendly to those building AI, but then actually demand as well, because the US government were paying so much for defense, right? So you had all of these different stakeholders who had a vested interest in making sure that ecosystem developed. I think that's what we need from an African perspective. We need to be investing in talent. At Techstars, we take our founders through a 3-month training program. That's nowhere near enough. We need to be investing in tech talent for years and years so that they are uniquely positioned on a global scale to compete when it comes to building LLMs or building these tools that can be used globally. And then infrastructure, right? The LPs, especially ZFIs, I think need to be paying more attention to high internet speeds, internet access, energy access, because if we have founders in Nigeria, for example, who literally spend 2 hours of their day just figuring out, how am I going to generate power today when NEPA goes? How am I going to make sure that my staff get to work when the bridge is closed and when they can't get money out of their bank, when switching is turned off so they can't transfer from one bank to another bank? There are so many infrastructure challenges that our founders need to deal with before they can even build. And again, that goes far above our heads.
Great, yeah. Definitely a lot of supply side stuff that we need to think about. I think we have maybe 5 minutes left, but I want to, before I open up for questions, I want to ask all of you on the panel a question, and I'll start with you, Kristen. So, the name of the panel, I think, is Chartering the Path for AI Investments on the continent. So I want to sort of just, for you to share what you see as like the best possible outcome, right? Like, we've heard a lot about leapfrogging in the last panel. We've talked today about some of the challenges, et cetera. So when you think about if we get the right amount of capital, the right conversation between investors and builders, what do you see as the best possible outcome?
So I think for us, the best possible outcome is well-being, right? For people across the continent, people across the world. That is ultimately what we're looking for, right? Prosperity. The technology is nice, the technology is cool, but really fundamentally, the outcomes that we're looking for is improved lives, improved experiences, longer lives in some cases for those that are interested in that. But essentially, that is the best possible outcome, that these technologies are enabling better outcomes, reducing poverty, increasing access, and so on and so forth. Maybe at a slightly different angle and just thinking about it purely from the point of view of the technology, I think it's just contributing to the conversation in more interesting ways. So fundamentally, when we're talking about artificial intelligence right now, right, because we don't really have AGI, we are talking about data sets. We are talking about large language models that are processing. So I think in the short term, right, our short to medium term, our best possible outcome is much better proprietary data, right? More intentionality around that aggregation, that that cleaning, that structuring, faster, cheaper, better ways to do that. Being able to drive down the cost of, one of the good things about us operating from a resource perspective is that ability to see cost optimization opportunities. And so part of what I'm hoping for as we try to drive more capital toward the continent and toward getting African founders and founders building in Africa participating proactively in this AI revolution is that they're also helping us figure out more efficient, more environmentally friendly ways to drive this technology forward.
Great. And Thibault, over to you. Just best possible outcome.
The best possible outcome for me is that the GDP of Africa and emerging markets is significantly increased, much higher than that of developed markets, such that the average GDP per capita actually starts veering and narrowing out to that of developed markets. Like, technology and AI can help democratize and solve some of the biggest problems that we have on the continent and across emerging markets. And whether we're talking about education or healthcare or governance, logistics, supply chain, like everything. And in fact, the opportunity in Africa to solve those problems and to have a material impact on the economy is so much bigger because of kind of where the economies and the quality of living, et cetera, is today. So I would like to see ultimately, in an idealist world, that we kind of are at a level playing field with developed markets.
Great. And Owen, would you like to close for us?
Sure. So I guess you've spoken about the opportunities, perhaps not to be pessimistic, but I think it is really important that we talk about what happens if we don't participate in this, right? Because I think it can be quite scary if we don't. So if we don't participate in this, and if we aren't at the forefront of these conversations, the risks are high. So, for example, there are risks that actual harm can be created through AI. If we continue to apply AI that has not been developed based on diverse data sets, then the application of that can be dangerous. I think, most of us will know that when they started creating driverless cars, they saw black pregnant women as the shadows of signposts. And that's because there was not a diverse data set. We talk about using AI in health, but if we are looking at processing images that aren't based on black populations, then there's a really big risk of misdiagnosis. We talk about jobs, right? Everyone's scared about AI taking their jobs, and there's that saying that AI isn't going to take your job, but someone that knows AI is. And the reality is that so much of our workforce in Africa are doing manual work, and it's the kind of work that can easily be taken over by an AI. So what we need is that we are training individuals to actually participate in that rather than being the victims of that. And Timbo spoke about this $3 trillion figure, right? The idea that if we do embrace AI, GDP can increase by $3 trillion, I think, by 2030. If we don't, what it means is that the rest of the world is benefiting from that, and we're lagging behind. So not only have we missed out on the first, second, and third industrial revolution, but we miss out on the fourth one. The digital divide increases, the economic disparities increase. So it's a really, really important conversation that needs to be had, whatever kind of stakeholder we are.
Excellent. I think we can open for questions if there are any in the audience. Okay. All right. On that note, thank you so much to my panelists. I know I learned a lot. I hope you all did too. And enjoy the rest of your day. Thank you so much, guys.